Hello everyone and welcome to our training today on why you should not be buying business trade lines to try to build your business credit profile. By the end of this training, you're going to understand exactly what business trade lines are. You're going to understand all the problems that can have when you're actually using business trade lines, and you're going to get quotes from everybody that matters, everything to do from the bureaus to the government agency, and everybody's insight on what you need to know about business trade lines. So let's dive in and let's take a look. For those who don't know me, my name is Ty Crandall. I'm CEO of Credit Suite. And at Credit Suite, this is what we do. We help business owners obtain money for your business, and we do it by improving your fundability, the things that make you fundable that lenders and credit issuers look at to determine if you should get approved, by building business credit for your EIN that's not linked to your social, the legal and legitimate way, and also helping you access all capital, including loans and credit lines. So if we can help you get money for your business, feel free to give us a ring, 877-600-2487. So let's talk about business trade lines. Well, legitimate business trade lines are basically just lines of credit extended to businesses by vendors, usually by trade vendors. So a business gets goods or services and agrees to pay for them at a later date, okay? And the trade lines are often established between a business and that vendor, and it's the opposite to a line of credit offered by a bank. So a bank line of credit, they give you a line of credit, you can use it anywhere. With these accounts, you're just using what the trade vendor that actually issued you the credit. So in using that credit, that's what actually will establish what's called a trade line. So a trade line's really the reporting of an account to the credit bureaus. So if I go and get an account with Chase, and Chase reports that credit card on my business or on my consumer or business credit card report, it's considered to be a trade line. So trade lines can help businesses build credit since the loans are frequent and the turnaround is quick. They're able to come in, people are able to get credit with trade vendors, for example, that reports on their business credit reports as a trade line, and they have a legitimate trade line on your business credit report. It's a very legal, legitimate way to build business credit, and they can rapidly help you by building out positive credit experiences because you're getting credit with trade vendors, you're paying it as agreed, that's reporting on your business credit reports, and then that's helping you establish positive business credit. Okay, now there's also illegitimate business trade lines. So there's a lot of companies online which promise to sell what are called seasoned trade lines. And if your company has poor little credit, you can basically, for several hundred or thousands of dollars, have your business piggybacked onto the account of someone else with established excellent credit. Now, new business owners can seem more creditworthy than they really are this way. Okay, and what you have to ask yourself is, look, does this sound okay? Does it sound ethical, unethical? You know, typically when you're coming in like this, you don't have established credit. You're piggybacking on somebody else's trade lines to make it look like you have credit that you don't have. Well, then a lot of people, and as you'll see, really look at this to be very unethical. Okay, so something to think about. And Andre says, what's up? What's up, Andre? So that being said, this is the way to look at this. Why are you buying trade lines? If you're buying trade lines to try to inflate your business credit report to make it look like it's something that it's not, you're really flirting with almost fraud at that case. Because what you're doing is you're trying to fool a lender or credit issuer to giving you money based on a credit profile that's not really yours. So it's one way to look at it. Now, that's just my opinion, but we're going to hear the bureaus, we're going to hear the government agencies, we'll hear all of them chive in as we dive in a little bit later. So what is piggybacking a trade line that I just mentioned? Well, piggybacking trade lines is a practice involving seasoned trade lines. So a creditworthy borrower's accounts are used to improve the credit of an unrelated third party. So a creditworthy borrower adds the third party as an authorized user on his lines of credit, but he or she does not actually provide the third party with access to that account where they can actually use it. So it's kind of like, I have good credit, I have good established business credit, I've got good trade lines, I add you on my trade line just to make it look like you actually have access to that same trade line, but the reality is I'm the only one that has access to really use that account. You don't. So hence the authorized user never actually gets to use the credit. They're just trying to piggyback off the credit of somebody else so they get positive credit on their credit report for the credit that the other person has truly built. So how does it benefit anyone? Well, the benefit to the third party is an improved credit rating. It shows that they're already approved for higher limit revolving accounts, and in theory, showing you already have credit is supposed to make you more creditworthy for higher limit accounts. And many companies claim to then be able to secure $100,000 to $250,000 credit lines once these accounts are reporting. And this is oftentimes how I see this proposed. Somebody comes in and says, look, this is what we're going to do. We are going to sell you these trade lines. These trade lines will be added to your business credit report. Once you have these trade lines added, then we will take your established business credit report and we will go out and get you $100,000, $200,000, $250,000 credit lines. Now, I have some really smart friends, and I can tell you that a lot of my very smart friends, or few of my very smart friends, have fallen into the same trap and have come to me selling me on this concept, insisting they've done due diligence on the company and insisting that everything is good. And then guess what happens? They buy the trade lines. The trade lines are added, maybe not as many as they bought, but some are added. And then the company never actually succeeds to get them the money they promised to get them. So to date, and I open this up for anybody, if you have somebody that this has actually worked for, email us at info@creditsuite.com. We'd love to hear. But today, I've never physically actually seen at all anybody add fake trade lines to their business credit report and then turn around and get a real credit line based on their fake business credit report. I've never seen it. I've seen a lot of sources come in and tell me they can do it. Okay, I've seen a lot of sources promise they can, and then I usually say, okay, give me some references of people that have actually done it, and then they can't provide any references of people that have actually succeeded with getting this done. So that's really one of the biggest problems is these companies are saying, we're going to build a fake credit profile, then use your fake credit profile to go get you real credit lines. The reality is I've never seen anybody really get the real credit lines based on the fake business credit profile that's established. Okay, so something to think about. Now, Bill says, people think this approach works because you can do it with personal credit and improve your personal credit scores. And he's right. And we're going to talk about consumer credit. We're talking about today during consumer credit and business credit because their two are very different. As we'll talk about today, there's a legitimate way to do this on the consumer side. It's just different on the business side. Okay. And Mr. Blue Magic says, I need to speak to someone ASAP. Credit Suite. Okay, then just give us a ring. Here's our number, 877-600-2487. If you give us a ring today, you'll be on the phone with us within an hour. So ultimately, it's just dishonest. What's happening is you're using a fake credit profile to try to get real credit lines. And as you're going to see, lenders are just wise to exactly what you're doing. So how do piggybacking companies work? Well, a company offering the piggybacking service maintains a network of creditworthy card holders or vendors. They will add strangers to those people's accounts as authorized users for a fee. A third party looking to increase their credit score contacts the company. The company then offers a select trade line to the client and charges the client a fee per account. Now, the FBI has found that the trade line company can be a fake and primary card holder can be stolen identity in these kinds of scams. And we'll hear from the FBI later because I don't like to just come into these things with my opinion. The reality is when I talk about buying trade lines, when I talk about shelf corporations, I always get a bunch of negative comments from people that really sell this stuff. Okay, and I get it. I mean, you're selling, the shady stuff, and you get upset when people call you out. I understand that. So I like to, in these presentations, include real quotes from, people like the FBI. Let's hear what the FBI has to say. And these are cases where they're saying oftentimes a lot of these companies take the money and run. That's one of the biggest problems. Another problem is that the companies sometimes that they're using as card holders or vendors are actually stolen identity. So, hey, not all the time, but some things to look out for if you're actually going to come in and you're going to entertain this kind of products. You're willing to buy them. It's at least willing to keep an open mind that these type of things can be happening and know what to look out for. So the client's going to pay anywhere from $500 to $2,000 per trade line. The company submits the order to the card holder. Once the trade line reports, the company pays the card holder their fee, and this runs anywhere from $50 to $250 per authorized user. And the company retains the remaining funds as revenue. Sounds like a pretty good business model, So I'm going to people that have legitimate trade lines, and then I'm going to people that don't have trade lines. I sell those people these trade lines. The people pay me a fee. I pay the people that I'm adding an authorized user to their account a fee, and there you go. That's ultimately how the business really works. Okay, so that being said, this is kind of an overview of how the system works. Now, Credit Plug says, how do you even add a business as an authorized user? The concept doesn't jive the same on the personal credit. It doesn't, but we'll talk about that a little bit with personal credit and business credit a little bit later. And you absolutely can. So if I have a business credit card that reports to Experian Business or Experian Consumer, the concept is exactly the same. So if I have a credit card that's with Chase and Chase reports to Experian on my consumer credit report, and I get added as an authorized user, or somebody gets added as an authorized user, well, then that would report on their consumer credit report. But if I have an account with Chase that reports on my business credit report and I get it as an authorized user, the same thing applies. So the answer to your question is it depends on where the account is actually reported to the business or consumer reporting agencies. So personal credit, as we talked about, is different. Consumer trades as an authorized user are considered legitimate. A person with poor credit can use this strategy legally. Hence, if you know someone with great credit, ask if you can become an authorized user on their card. You never need to use the card, yet it can still help you raise your personal scores, but never your business score. So let me acknowledge that there's a difference between the personal and the business world. I personally have seen great benefit by people doing this in the consumer world. I believe in it strongly. As a matter of fact, the third largest aspect of your consumer credit score is the length of time you've had credit history. It's 15% of your score. The only legal way I've seen to backdate credit history on your credit report is by getting added as an authorized user to somebody that has a long-standing, good, paid-as-agreed account. So I recommend this all the time when I'm talking about consumer credit. It's a great way to boost your consumer score. It adds length of credit history to your report. If the payment history is good, it adds payment history. Utilization's 30% of your consumer score. It boosts your utilization. And this exists for a lot of reasons, especially because, people have kids. And kids have parents. And if I want to help my child actually build their business credit, then it's a good idea to add them as an authorized user. As a matter of fact, my kids have credit and they are less than 12 years old. Because before the law changed on this, I went and added them as authorized users. Now they ask for your date of birth to do this. So it's changed now. But it used to be that you could just go in and add an authorized user. They never even asked for date of birth. So I was able to even have my kids added as authorized users. And they actually have credit at 9 and 11 years old. So it's very effective and it works very well on the personal side. But the problem is it's very different, as you're about to see, with the business side. So what does the Federal Reserve say? Well, the potential distortions in credit scores that piggybacking credit may introduce suggest that a reconsideration of existing regulations, industry practices, or both may be warranted to preserve the predictiveness of credit score models. Okay, so this is just one quote from the Federal Reserve. So what they're saying is, look, we might have to reconsider how we do this because ultimately it's just blatant manipulation of credit. And the problem with that is it really adversely affects the predictiveness of credit scores when somebody's getting credit for credit that they didn't actually earn. Okay, so some feedback there. Now, Bill says it takes time, but to do it the right way, you'll gain a real education. You're right. On the consumer side, I absolutely agree that that's the case. So what does a former D&B employee say? Well, opening a business credit account with any company is free. If you're paying for it, you're being ripped off. When the company who sold that trade line to you gets taken down, all their clients will be punished too with a mound of debt and a cursed credit file that will keep you from getting more credit to be able to pay it off. Let me explain to you what happens here. And let me explain to you why Joy here with D&B is talking about this. What happens in the business world is this. These companies that sell trade lines are already being scrutinized and red flagged by the bureaus. So what happens is these people are using the same people to add trade lines too. So let me give you an example. Let's say company ABC has customer John Smith and has somebody John Smith, and John Smith is who they're piggybacking credits for. So now they come in and somebody wants to buy a trade line and they add them to John Smith's credit report. The problem with this is that they see this happening again and again and they red flag the company doing it. Now what happens is this. Not only will D&B remove that item from the business credit report, D&B will completely shut down the credit profile. It's shut down. It's ceased. It's gone. So we see this happen quite a bit. People come to us and go, hey, I don't know what's going on. I established a business credit with Dun & Bradstreet, then I went to log in, and all of a sudden my credit profile is gone. Like I log on and there's an error message stating that it no longer exists. Our first question is always the same. Did you buy trade lines or did you buy a shelf corporation? Their answer is always the same. Yes, I did. And then we explain, here's what happened. You bought from a company. D&B knows that that company sells these trade lines. D&B saw that trade line appear on your business credit report, and D&B has now terminated your credit report. It no longer exists. It's over for you. Of which they always say, how do I get it back? And our response is always the same. You don't. You start over. Sorry. That's the way it goes. You tried to defraud the credit bureaus. They found out. They caught you. And now this is the punishment. This is the way it is. So actually, we have a client that flipped out because a company that sells Tradeline put an inquiry on her business credit report. They didn't even sell anything to her. She didn't even buy anything. They, without her permission, inquired into her business credit report, and that inquiry put a red flag on her business credit report, alerting other credit issuers that there could be potential problems. So that's how serious the reporting agencies are about this on the business side. They will completely cease and shut down, and your credit profile is gone, and you will never get it back. And even if they think you're flirting with, you're even messing with these companies, they put an actual red flag on your business credit report to alert all other future credit issuers to beware to actually see you issue credit. So we see this happen all the time. So what does the FBI say? Well, when commenting on 2013 busted fraud ring, a second kind of trade line is the authorized user trade line, where a credit and card holder adds another so-called authorized user to a credit account. This raises the credit score of the authorized user, who inherits some of the primary user's credit history. Some defendants created and sold fake lines of credit for false identities made up by other defendants. These fraudulent primary trade lines were then used to increase the credit limits on fraud accounts so that defendants could reap even larger profits. Defendants used the authorized user trade line to create new identities. So there's all kinds of problems here, okay? And the leader of that scam ring was sentenced to 80 months in prison. So here's what's happening. What they're saying is, look, first of all, you got all kinds of problems. I mean, the bureaus are going to figure this out anyways. But the bigger issue is that, are you buying trade lines from a legitimate company? A lot of these companies are fraudulent companies, they're fake companies, they're going to rip you off. And then a lot of these companies are actually selling stolen identities that they're adding you to. So then when you have that problem, now you're a victim of, or they're a victim of identity theft, and you're the perpetrator. Like, you can actually be held accountable and responsible for that identity theft because you're piggybacking on to an actual fraudulent account. So some things that you really want to think about here. Now, Mario says, is buying an entire company that already has business history credit? It is absolutely legitimate. You can absolutely do that. So what Mario is saying is, hey, look, what if I buy a company that has an established business credit profile? Is that legitimate? Absolutely it is, because you're buying the actual company itself. And in doing so, you need to keep in mind, you're responsible for all the liabilities of that company. So let's say, for example, that you buy a company that already has trade lines established. Perfect. But here, let's see if that company has lawsuits against them. That company has unpaid debts. All those things are things you need to be wary of, because those are the other side of the coin. But remember, business credit is credit that's built for the business EIN that's not linked to the owner's social. It's reflective of credit that a business pays its bills, not the business owner. So when you buy a business, you're buying, business has established business credit, then that's completely legitimate. Because if you think about it, the business itself has proven that it can pay its bills. Now you own the business, and the business has proven it can pay its bills, so it has an established business credit profile and score. So that is absolutely legal. It's absolutely legitimate to do. But like I said, Mario, keep an eye out, because in some cases, not in some cases, in all cases, and I'm not an attorney, this isn't legal advice, but in all cases, you would be legally responsible for any debts, any lawsuits, any judgments against that company as well. So other things you should always look out for. What does FICO say? A shadier version of piggybacking has been promoted by some CROs who offer to rent to their credit challenge customers the trade lines of established account holders in an effort to boost their customers' credit profiles and scores. So FICO, not a fan as well. What does Equifax say? Authorized user abuse occurs when low-risk primary credit owners rent their trade lines with extensive credit histories, high credit limits, and solid repayment profiles to others, most times unknowingly to fraudsters. And again, a lot of them continue to mention the fraud that runs rampant in this industry when it happens. So let's see what Experian says. Buying trade lines may be viewed as a deceptive by lender and credit reporting agencies. It could even put you in danger of committing bank fraud. Credit scores are designed to help lenders determine a borrower's credit worthiness, and most use your credit scores and reports to determine whether to approve a credit application and what terms you qualify for. If you pay money to improve your credit scores without doing any of the work or even getting a card to use, you could be falsely representing your credit worthiness to potential lenders. I can't sum it up better here. And again, I'm not an attorney. This isn't legal advice. But think about what's going on here. So far, we've heard from the Federal Reserve. We've heard from FICO. We've heard from the FBI. We've heard from the credit bureaus. All of them say the same thing. This is shady. Do not do it. In my life, in my 44 years on this planet, one of the many lessons I've learned is that the FBI, okay, the Federal Trade Commission, the Treasury, the credit bureaus, the FICO, when any and all of these organizations tell you not to do something, I don't know. It's probably a bad idea to do that thing. But I think Experian sums it up the best. So let's break this down. Buying trade lines might be viewed as deceptive by lenders and credit reporting agencies and put you in danger of committing bank fraud. Is it? Think about what fraud really is. Aren't you coming out and buying fake trade lines to add to your legitimate business credit report to try to con a lender or credit issuer into giving you money based on false pretenses? I mean, it's kind of the definition of fraud if you think about it. Aren't you really trying to defraud a lender or defraud a credit issuer to give you money based on a fake credit profile? And that's what happens in the business space. And this is exactly what they're saying is, look, when you're doing this, you're really flirting with committing bank fraud because you are lying to a lender, trying to convince the lender that they should give you money based on false pretenses because that credit profile is not yours. Okay, now the other thing you say is if you're coming in and using your credit scores reports to determine whether to approve a credit application, what terms you qualify, if you pay money to improve your credit scores without doing any of the work or getting a card to use, you could be falsely representing your credit worthiness to potential lenders. That's another pretty strong statement. Okay, you're in danger of committing bank fraud. You could be falsely representing your creditworthiness to potential lenders. Let's be honest, isn't that what you're doing? You are falsely representing your creditworthiness to potential lenders, and you're doing it intentionally, especially when you come in to buy these trade lines to try to immediately go to a bank to get $100,000 or $250,000. So some very strong words here from Experian, but very accurate too. Potential of committing bank fraud, falsely representing your current creditworthiness to potential lenders. So let's just think about this. I'm not an attorney, not legal advice, but just think about this. What happens if you came in, you fake your business credit profile, you go get a $50,000 credit line somehow, some way, and then you default on that credit line. And the lender comes out and figures out, pretty easy to do, that you actually falsified your business credit report. Do you think that you're liable somewhat for them to come at you for actually trying to defraud them or falsely representing your creditworthiness? These are things you have to think about, especially when you're buying these fake trades with the absolute intent and purpose of fooling a lender and credit issuer to giving you money that you know that you really don't have the creditworthiness to be able to qualify for. So some things to think about here. Now here's a quote from NAV as well, the biggest in the business credit monitoring space. Rarely does this turn out to be what it seems. The established credit lines may not be types of funding the new business needs, and if lenders catch whiff of the new business owner trying to take advantage of this scheme, they can quickly shut these accounts down. It's usually shady. Okay, and this is very true. So what happens is now the credit bureaus are putting red flags in the credit report. They're alerting credit issuers. They're alerting lenders. Lenders and credit issuers can easily at any time pull back that credit that they may have issued you, even if you had legitimately got it. So let's say you bought trade lines to boost your initial credit profile. 3 years have passed and you've built legitimate legal business credit the right way on top of that. Well, at any given time, 3 years later, the business credit reporting agencies can shut down your profile, even though you built a bunch of legitimate credit on top of fake trade lines. Or you can come in and have lenders and credit issuers really give you loans and credit lines that you really qualified for, then figure out that you've got red flags on your credit reports because you bought trade lines from these companies, and then in doing so, they shut down and take away your real money. So the problem with this is, it's like, I don't know if I should relate it to this or not. It's like committing murder. Like, you kill somebody, like, for the rest of your life, you have to look over your shoulder because there's no statute of limitations there. Like, you can be arrested at any given time. You go steal something, like, eventually, after so many years, like, they can't try you in court after that. So it's like this. For the rest of your life, you have to look over your shoulder because at any given time, your then legitimate credit profile you built can get shut down because of what you did in the early stages when you bought these trade lines. Now, Bill says, age shelf corporations, are they legal and what benefits do they bring? It's exactly the same thing. And we've got great training on shelf corporations. It's a great question. So shelf corporations are exactly the same thing. They do have some kind of purpose, some cases. So for example, to bid on government contracts, sometimes you have to have a business that's been open for 2-3 years. Okay, I guess that could possibly work for you. But the reality is that aged shelf corporations don't help you build business credit. There's this myth that you need to have somehow a company that's 2 or 3 years old to build business credit. But the reality is we can show anybody money to build business credit from a startup stage. So that's what you have to ask yourself, is that why would you even want to do this? Why buy a shelf corporation or Tradelines and try to fake that you've been in business longer than you have, or that you have credit that you don't have, when you could do this so easily the right way? Go in, build your fundability, get vendors with Uline, Quill, Granger, legitimate trade vendors, buy stuff you really need to build to be able to grow your business. They report to the business credit reporting agencies with real trade lines. You use those real trade lines you've established, and then you go get more real credit, and you use the real credit to continue to grow your business. You don't need a shelf corporation that's been open 2-3 years when you could do it with a startup the legal way. And by the way, to answer your question further than that, Bill, it's exactly the same thing. Because when they flag shelf corporation companies the same as they flag business trade lines, which means when they know that you've had any interaction with these companies, they red flag you. If they know you bought from them, they shut your credit bureau's reports down regardless. Same with shelf corporations as it is with buying trade lines. Okay, and Bill says only ask because I see a lot of ads for them. So that's exactly what you need to know about that. And Mario says, how can you check debt on a company? It's a good idea to pull their business credit reports. If I was going to buy a company, the very first thing I would do is buy all of their credit reports from Experian, from Equifax, from Dun & Bradstreet, and I would do a deep dive. I wouldn't even do a NAV credit report. I would flat out go and spend my $250 to get the biggest, most extensive credit reports I can buy from all three of those companies. Okay, the other answer to your question, Mario, is you asked a question. You said, can I buy a company that has a business credit profile? The reality is most of us that buy businesses, like I buy businesses, I don't buy the business. I buy the assets to protect myself from that. So a lot of people, when you look at Roland Frazier, for example, has a phenomenal course on actually how to buy and sell businesses. And again, as he says the same thing, you don't want to buy the business because when you do, you buy all the liability for it. Instead, you want to buy the assets of the business. That way you own what you want to own from the business without the risk of taking on the liabilities, having judgments against that business, etc. So hopefully that answers your question. So lenders and credit reporting agencies know all these unethical methods out there. And this is one of the most shocking things that still surprises me. Do you really think that you're going to fool Bank of America? Like, honestly, do you really think you're going to go buy business trade lines that are fake and add them to your business credit report, and Bank of America is going to be like, oh man, you got me. I never saw that one coming. Guys, these companies are worth trillions of dollars. Fraud is their number one concern. Do you realize that bank applications, more than 50% of them are denied because of fraud concerns? More than half. Every loan application that goes into a bank, half of them are denied because the bank thinks it's fraud. And in a lot of cases, they are fraud. That's how much fraud lenders are dealing with. So they are very good at spotting this kind of fraud. They know about these methods and they're looking out for these kind of methods. They're always going to be looking for them. They see when a company ownership changes. So Bill had asked about shelf corporations. Here's how they know. The minute an ownership change takes place on a business credit report, it immediately throws up red flags to credit issuers and lenders. And in a lot of cases, lenders will then look at the bank account start date instead of the corporation open date because of the risk of you potentially buying a shelf corporation. So they're looking for things like company ownership date. They're looking for new authorized users on cards, right? Then what they're doing is they're then matching up the authorized user cards that you were added to against a database that tracks if these have ever been linked to other companies that sell trade lines. That's the problem. And this is what the Bureau's algorithms will do. You add a Chase account as an authorized user. You're like, hey man, my credit sucks. I'm going to buy this business trade line here from Chase and get it on my credit report. And you buy it from Joe Smith. Well, the credit bureaus know that Joe Smith has had many other people piggyback on his and knows and has tracked it back to a company that's selling trade lines, and Joe Smith is the one that they're being added to. The bureaus know this, and then what they do is they shut down every single business credit profile that had an authorized user account for Joe Smith. It's how the process works. It's exactly how it works. Is their databases and algorithms track the companies and the individuals that these trades are actually coming from. And when they start to see multiple people piggybacking onto the same person's account, it obviously throws up a red flag. And then what they do is then they boom, their algorithm goes in and does a deeper deeper level of research, they realize that all these people are being added to Joe Smith. Then they track back, they find the company that did it, they red flag and shut down any company that had anything associated with Joe Smith at that company. It's what happens oftentimes. A lot of this is actually how it goes down and how you get caught. They just dive deeper. So sooner or later, D&B is going to determine you bought Tradelines. So will Experian and Equifax. And if Tradeline sells company inquire into your credit report, then D&B is tipped off. I've already told you we've had real clients that exact same thing has happened for and red flag them. And at any time, if you buy a Tradeline, the seller will check your credit because they want to be sure that they get paid. That's one of the ways they tip you off. So they want to make sure you're going to pay them. They look at your business credit report. They put an inquiry on your business credit report. The bureaus know that company is associated with shelf corporations or buying trade lines. They immediately red flag the credit report. And if they see that then the trade line actually then appears on your credit report, then they just shut it down. That's exactly how that process works of how they typically, you will get caught. So the methodology. Well, shutting down trade lines is just the start. D&B will red flag your entire profile, as I mentioned. They will flag legit trade lines alongside the legitimate ones. You'll lose whatever time you think you gained, plus you're out the cost of the trade lines. You bought the trade lines, and then you lost your credit profile and you have to start over. And I'll tell you, the worst time I see this happen is when people bought trade lines, built legitimate business credit on top of it. Years later, they find the company that sold them the trade lines gets on D&B's radar, and D&B shuts down every credit profile that had an inquiry from that company or anybody that they were adding trade lines for that had an association. And then somebody comes in and they literally had been building legitimate business credit for years, but they get shut down for what happened years before when they bought the actual fake trade lines. So when a company is known to be a trade line seller, then that company gets flagged. Any new inquiries by that flagged trade line seller harms the buyer. And so the older trade line sales. There's no statute of limitations on this. It's not through the court system. So if you bought a trade line 50 years ago, they still find out, and that's what happens. Like I said, you permanently have to look over your shoulder because even years later, when your company is legit, when your trades are legit, they're still going to be tracking the companies that sold these. And when they know that you bought one or they know you're associated with them, they either red flag or shut down the credit profile, whether you're associated with them or whether you bought them. So look, even in a rough economy, cheating and shortcuts to build business credit, it's just never going to pay off. You know fast and legal ways to build business credit. I mean, look, go to youtube.com/credit suite. You're going to find hundreds of videos for us. We map out the steps to build business credit. Go to Facebook and type in business credit into groups or get business credit. Our group has 30,000 members in it of people helping each other legitimately and legal do this. Heck, give us a call. Pay us to build business credit with you. We will work with you to build business credit. Take 3 years of this process and condense it to months. I don't care if you use our free training or work with us or work in our group with our tribe and help you do it. But any way you do it the legitimate way. Don't try to fake your way in. Because look, let's be honest. You are not smarter than Bank of America. You are not smarter than FICO. You are not smarter than the actual Federal Reserve and from the FBI. These organizations know what to look for, and that's how you end up getting caught. Okay, you'll probably hear about some less than ethical ways to build business credit like shelf corporations, like buying trade lines, but as you've seen here, okay, the credit reporting agencies, the FBI, the Federal Reserve, they all say not to do this. Even FICO says not to do this. So just common sense tells you that if Experian, if Equifax, if Dun & Bradstreet, if the FBI, if the Federal Reserve, if FICO, if all of these are saying not to do something, it's probably a pretty good idea that you might not want to do it. And again, they all know about this. Credit reporting agencies and lenders are very well versed on the practice of selling trade lines, and they're also very well versed on buying shelf corporations. And what happens in that case is they just figure it out and they red flag you and shut you down. And not to mention that it could be potential identity theft. You could be getting scammed by paying companies that don't deliver. And again, today, I've never seen one person actually ever really show me that they built a credit profile with fake trades and then really went out and got a legitimate credit line. And here's why. Because those legitimate credit lines are based on your income. They're based on your revenue. They're based on a lot more things than your business credit report. And if you're buying trade lines, there's all kinds of red flags as well. Let me give you an example. People don't just typically start business credit profiles with $10,000 to $30,000 trade lines. They're usually just like with consumer credit, start with small limits, and the limits get bigger. So there's all kinds of algorithms in the bureaus have that look for these kind of red flags. It's just the way that it is. So buying trade lines is just really unnecessary. I mean, if you're going to spend the money to do this, why not just work with a company and pay a company? I'm not even self-promoting here. There's other companies as well. Whether it be Credit Suite, whether you go and look at our free training, there's other ways that you could do it instead of spending the money. Or if you're going to spend the money, then work with a company that can help you do it the legitimate and legal way. That way, 30 years down the road, you're not looking over your shoulder. You know you've done it the right way. And again, not trying to self-promote. We have all kinds of free training you can use as well. I'm just making the point that if you're going to spend money, then work with a company to do it the right way. Don't try to fake or fraudulate your way in to actually being able to get a business credit report. It doesn't make sense when you can follow the legal steps to do it the right way. So can we help you? Give us a ring, 877-600-2487. When you call us, what we always do on an initial call with you is we do an actual fundability assessment. We look in Secretary of State records, all these other places to see how fundable your business is now. We then do a free check with the reporting agencies to see if you have credit established with them now that you don't even know about. If Experian and Equifax know you exist and you have no credit, they'll give you failing scores. So we want to do that search for you. We'll help you get your business credit reports for free, and we'll even tell you all the funding you can get for your business for free as well. So if that provides value, then give us a ring. We can help you with all of that at no cost. And if you like this, if this helps, then do me a favor. Give me a like on the video. I really in real time can see your likes. I have 15 so far on this video. I'd like more. And what that does is it just tells YouTube that this content makes sense, that it provides value. And then it lets YouTube understand that it provides value and then show it to other people. So my mission is to help as many people as I can, and you can help me with my mission by liking the video, subscribing. We'll notify you when we go live. We go live twice on YouTube a week, live on Facebook twice a week, and you can follow our podcast as 300,000 plus downloads. You can listen on air. You can get tips daily on Twitter, Instagram, Facebook. It's all creditsuite.com at the top right of our page. All of our social channels are there for more ongoing information on getting credit and getting financing for your business. Okay, so if we can help you along the way, give us a ring, 877-600-2487. I'm going to go ahead and wrap this up. Looks like along the way, I've managed to be able to answer all of your questions. But if you have more questions or you want to do a free business credit consultation to get your reports for free and the other things we mentioned, give us a ring at 877-600-2487. And thanks for the likes. My likes literally just went from 15 to 25. 10 of you liked it just because I asked. That's awesome. Thank you very much. I really appreciate that. And I will go ahead and wrap up. But if we can help you along the way, give us a ring, 877-600-2487, info@creditsuite.com. We'll do that free business credit consultation for you, see where you are now, give you tips and tactics to improve, help you get your business credit reports for free, and map out a path to success the legitimate and legal way with business credit. Okay, and we can also help you access all different kinds of loans and credit lines as well. Now, Frank says, how to minimize hard impact checks and damage on your credit report caused from trying different banks to get a HELOC or first mortgage. Well, you need to keep in mind, Frank, that all mortgage inquiries in 30 days count as only one into your FICO score. So you might have a lot of mortgage inquiries when you shop for a home loan, but all car loan and mortgage inquiries within 30 days only count as one into your score. So even though you might see them on the report, it doesn't adversely affect your score. So hopefully that provides some value to you. All right, everybody, I'm going to wrap up. Thanks again. If we can help you along the way, give us a ring at 877-600-2487. Thanks, everybody. Have